Hello, everyone, and I hope that you've had a great weekend. I hope you're enjoying the UK bank holiday, if you're in the UK, I suppose. Um, I said I was going to post this tomorrow, but I'm trying to stay awake so I can get back to a normal sleeping pattern. So I'll try. If there's any mistakes, forgive me. But I'll go through the pairs as usual, as we go through on our normal weekly outlooks, and yeah, we'll see how things go. But anyway, I hope you all had a good week last week and the week before. But I am back to normal activity from tomorrow, so I should be trading. Well, I will be trading as normal anyway. So let's start off with EU. So uh, when it loads, okay. So I haven't looked at a chart since, apart from the ones that I've been sent in, obviously, but I haven't actually looked at a chart myself since I've been away. But so we'll see what's happening. Okay, so from a daily perspective, I think what we remember talking about was this POI being met. I don't know if it was this one or if it was coming from this POI. I can't remember. It was one of these two. It was something like this, moving into this bullish play. But in this case, what price has done? It's obviously mitigated something within here, which is obviously what we all class as an OB, and has hit the minimum target. However, it's not broken it, so we don't necessarily have another POI as such. Now, some of you in this position would try and start, for example, when price comes back, you'll think, oh, it hasn't broken structure, so this is still valid to continue. I wouldn't bother. There's no point. This has already been tapped, and that's already met the minimum target. Once it reaches the minimum target, that range is completed. You focus on the new range that's at hand. So in this case, in terms of the daily time frame, there's nothing more that you can do. Price has already technically completed. And by the way, how can I describe this? In terms of what I mean by technically completed, it means that in terms of from a vertex rule set, it's finished. There's nothing more that you can do, right? It's completed it. I was gonna put like a little meme here of Jay from In Betweeners, but I don't think I've got the energy to do that now. But anyway, so if that's the case, there's no point trying to force a situation in this scenario. So you can just go down to the 4 hour and see what's present there. So another thing this is good for building anticipation in terms of when you have this, especially when a huge wick, you can't. I guess you can't really assume that price is it's not strong enough or whatever to. People call these weak highs, weak lows, or whatever. You can't just assume that this is just going to reverse from here because of this huge wick. You can't assume that. However, you can anticipate it to an extent, but all you have to do is use that anticipation and incorporate the rules at play to go on with that. As long as you can fit the rules to meet what you are wanting to happen or expecting to happen. Expecting is not the right word, is it? You get the idea. And as long as you can fit the rules in to meet the criteria of what you want to happen or what you anticipate to happen, then that's fine. As long as you can justify it. That's when you have to ask yourself three questions of what is going on, how are you expecting that to happen, and what was the three questions, and how? No, what, how, what? I'm missing out the three questions myself. What's the three questions? I can't remember. There's three questions. What? How? It's not when. Why? That's it. The why. So in that case, you can justify it. You can justify and answer that question why in terms of what you're explaining to happen, what you're anticipating, and what you think is going to happen in terms of what you're aiming for. So your why could be you're aiming to take out the lows. You're aiming to take price to a POI, even though that's not a POI, but you're aiming to take price to a POI, for example, or whatever. As long as you can answer those three questions, you should have a valid trade at hand. As long as it meets the rules as well of whatever model you are following, it doesn't really matter. So in this case, in terms of 4 hour, we're in a huge range, so we can't really do anything. This is when you can dive into lower time frames and see what's happening, and try to aim against it basically. But I won't go into that in this weekly outlook in terms of because the weekly outlooks are mainly trying to give you a higher time frame perspective, and then if you are trading lower time frames, you can use that understanding of the high time frame, what the high time frame is doing, and then utilize that in your target plays for your lower time frame. Okay, so let's go to GU. I assume the GU is basically in the same position. Actually, no, GU is not. So we're sort of in this POI at the minute, so we're aiming to take out this high. Now, a lot of the times, I think I see people say that, it's not really broken by much. It's come back very quickly. There's not much momentum or whatever. The thing is, we can't say that just because of this little build up. We can't say that price is going to explode down. We don't know. We have to go with what we see. There's no point trying to anticipate everything, because if you're going to do that every single time, right? The problem, you're just going to start missing trades for no reason. It doesn't really make sense. But you can refine that daily time frame to this 4-hour POI, and then essentially just wait and see how price reacts. I think a key point to talk about is timing as well. In terms of when you time your trades, it's not about the problem we had is when we were trading purely high time frame swings, price used to ping like our alerts used to go off whenever, and we should trade whenever. The problem was you don't always get. You ideally want a move that will give you not justified move, a solid move that doesn't really have a chance of pulling back, which is why trading the lower time frames, especially on London Open, Frankfurt Open, New York Open, or if you trade Asia after spreads, whenever you're trying to catch that impulsive move of the range price. If you've got the correct range and the correct price action, price generally doesn't come back to your POI, and you can scale on a move. But that's where timing comes into play. If your POIs are met at certain times and you realize price is sort of dead, it doesn't really move too much at this time. So it needs, like now, what is it? It's 8:40 pretty much in UK time, which is very late. I'm not expecting too much to happen. If I was to enter a trade now, for example, I would expect it to linger around for a little bit, range in Asia, and then London will come and it'll probably shoot in whichever direction it goes. Doesn't necessarily have to go bullish, and go whenever it wants, but the idea is that you want to maximize, not maximize, you want to think about the return of investment as well. Well, this rate of return, even not return investment, rate of return. It's not about just marking out your POIs and trading whenever whenever the POIs go. Yes, it works, but if you want to think about how to be the most effective with your time, you would only want to necessarily trade around certain time periods that work for you. I'm not going to tell you this, I'm not going to say trade at this time, whatever. Depending on the model, obviously, you wish to trade, but for example, if you want to incorporate timing into it, you're going to have to do the testing to understand when does it work best for you, and when can you get those solid moves, basically, to support your plan of action. I know I'm not speaking as coherently as I normally do. I apologize. I'm a little bit tired. I'll be back to normal tomorrow. So okay, we're still forming this range low. This has been going on for ages. I'm surprised it's not really done. That's not broken, is it? No, it hasn't. I'm surprised it hasn't really done too much, to be honest. It's taken out that 4-hour high. Now we're taking this 4-hour low. Then we're taking this 4-hour high. It's not the most ideal price action. 4-hour low, break. Now we've just taken out. Oh wait, hold on. Now we've just taken out this high. There's nothing really you can do in terms of the daily. I don't think it's going to pull back to this. It's reacted to something within this range, which wasn't the clearest. You'd expect price to take out this low, as price is obviously confirmed to be bearish. But in this case, I'm not going to try and force a situation out of this if it's not too clear to read. And I see a lot of you try to do that, where you look at this, you're trying to force something out of it just because this may be the only pair you trade or whatever. It doesn't matter. Just wait for something that you can actually read. GJ, I mean, this is clear as day. You don't need to question it. And if you are still struggling with POIs, it says just watching not the breakdown, the Outlook video from the 11th, I think it was, 11th of April, I believe. One of them. I made a post about it, but why is good. It's a good one to watch in terms of simplifying the whole POI. Like, you guys should be able to do. I don't think that Outlook video is necessary for helping you mark out POIs, because they shouldn't be, because you guys should be able to do that by now. If you're watching Outlooks and you haven't finished the course, then you should get off this video. You shouldn't even get this far. If you get this far, you probably don't understand why I'm marking it. You probably have loads of questions. Get back to the course, finish it, and then practice. And then you start watching the weekly Outlooks and you'll understand what I'm trying to say. But these should be very easy to these should be very easy to mark. Now, I think I get a few questions sometimes is, why do I draw this box to the range low? It's just so I know where the low is. If price, for example, is in this range, I know I don't trade this pair, but just because you don't trade this pair, you still, if you're going to practice your analysis, do everything exactly the same. The reason is because when your price gets in there, you go to a lower time frame. You don't want to have to flick back to the higher time frame just to see where the range low is. I do that so I know that if price breaks it, then the whole plan is invalidated. So that's why I do it that way. You can do it that way if you want. Doesn't necessarily mean that the POI is that large. We can do this where you mark out the whole range, right, and then you have another box in between. Do that different color where you know where the refined POI is or whatever. It's completely up to you in that regard. EG, EG. You know what? I'm gonna scrap this pair. Forget it. I complain about it every single time. I never do anything about it. Forget that pair. I think something that I've noticed has come up over the last 2 weeks since I've been away is, especially judging from conversations, is a lot of you are going through the course and then I think you're trying to tie in too much, and you're trying to tie in your higher time frame ideas, your lower time frame scalp entries. You're trying to tie in everything in terms of your intraday together. You need to understand there's a difference between swing trading, intraday, and scalping. Okay, so let me try and make this as simple as possible. If you are swing trading, right, don't take this as I'm just gonna write SW for swing, IN for intraday, and SC for scalp. Okay, just so it's easy. Now, if you're going for swing trading purely, right, you're basically looking for daily and 4-hour POIs, and you're only going to trade when those POIs are met. In terms of your entry models, you can use any entry model within the course. You can use disruption, inception, James's model, your own confirmation model, your own. You can make your own entry models, whatever. Utilizing imbalance, order flow, whatever, basically, whatever's in the course. But you're only going to trade those daily and 4-hour POIs, and you're going to be trading the daily and 4-hour POI ranges. Okay. Now, in terms of targets, you're going to be targeting obviously the range lows, the range highs, whatever, as your minimum target point. Now, when you go to intraday, you're looking for 1 hour. That's not even a one. Tens. That's not even a one. There you go. You're looking for. Hold on. I'll get it there. 1 hour or below. Let's say 1 hour to 15 minutes. That's not even 5. Gosh. That works. You're looking for 1 hour to 15 minutes. Around this time frame. By the way, these time frames aren't gospel. You can use any time frame you want. It's just an idea. Same thing. You can only trade these ranges, and you're only going to target those ranges as a range minimum low, whatever target you're doing. And again, in terms of entries, you can use any model within the course: inception, disruption, James's model, or order flow, whatever. It's fine. You can use any of that. But there's a clear difference between the two. Now, if this is the case where you're trading this and you're trying to hold trades for, if you're trading intraday, you're going to expect to holding your trade for a day or two. Swing trading, you're holding for a few days, and scalping, you're closing within a few hours, or within the day basically, or within the session. If you're in this case where you're holding these trades for weeks, for example, then you're leaning towards swing trading, which I think is what causes the problem. So a lot of the times, not a lot of the times, my biggest trades have come from scalp entries. However, it could be questioning as do I swing trade or not. My intention isn't to swing trade. I don't swing trade anymore. I do scalp entries. How do I get the swing potentials from the trades? The reason I do the whole weekly outlook, I not only trade EU or GU sometimes. No, I trade GU and EU sometimes. Um, the reason why I do the weekly outlooks is well, mainly for EU and GUs for myself, is so I know what the high time frame direction is. So say for example, if the higher time frame is if the higher time frame is bullish, right? I'm in this scenario. Actually, let me make it a clearer picture. So say this is my H4. I've got this POI. Price is all the way up here. And then I come to London Open. I'm going to say just LO, and I have a scalp entry. And I've entered the trade. Once I'm in and prices hit the minimum target, I've secured whatever. Let's say it's 10R for example. Let's say I've secured that 10R. Actually, no, I'm gonna set high expectations in. Let's do 5R. Okay. Once I secure the 5R, that's it. I'm done. Anything else is just a bonus. But what happens here is I question whether the price has a reason to go any lower or not. Because once I hit that 5R, I'm happy. It doesn't. If it goes to break even, I don't care. If it loses, and it was not going to lose, obviously. But even if it swings all the way, I don't care. Anything else is just a bonus at this point. What I'm trying to say is, I am happy with this. I don't need anything else. So I go to the higher time frames and just assess whether price has a reason to go further down. Now, in this case, price has a reason because we have that question of we have the three questions of what, why, and how. What we have is the reason. The reason why is because we're expecting price to come to this POI to either react off it or take it out. Now, I mention this a lot of the times during my breakdowns, especially when I'm marking out targets. So this could be from a 5R, okay, then I have 50% or 25% running, and this whole move can be say 1 to 50 for example. Well, obviously that's not a full position. That was not my intention. My intention was to catch this, not this. So the difference between intention and the result. The result that led to this was purely from the higher time frame understanding, but I wasn't trading higher time frame at all. There's another way that you can see this in terms of, say if my higher time frame is bullish, okay, price is already reacting on it, and then we're already halfway up the move, and then this comes Tuesday, and we see London Open, and it gives me a scalp entry here, okay, and I continue. Now we hit the minimum target, I take that 5R, and anything else is a bonus. However, once I've hit that minimum target, I question whether I want to close it here fully, or whether I just want to hold and see what happens in terms of taking out the daily high, for example. So the trade could be taken on the 15-second, but I can use the daily as a target because that's what the high time frame is showing. Doesn't mean that it has to do that, it's just an idea. But even if price does come back to break even, do I care? No, you don't have to, because I'm happy with that. I think when you get comfortable with what you're happy taking, you don't necessarily care. At the end of the day, you're here to grow your capital. You're not here to catch the biggest risk to reward trades. It doesn't really matter. As long as you can hit 1 to 2s consistently, you'll be fine. You'll be profitable. But you just need to have a model to be able to do that. Now, there's other ways. Now, another thing I need to sort of address is when you have this, for example. So the price is moving like this. The London Open comes, and then you have a bearish entry. Now, in this case, I would take the minimum. Say I take the minimum target and hit the 5R, for example, and then I go to the higher time frame and look. Okay. Price doesn't really have a reason to go any lower because price is mainly going to be bullish. So I might as well just close the full position here, secure whatever that is. So say if it's 10R, I secure that. And even if price does go further down, I had a reason to do that because I didn't expect price to even continue. I expected price to be bullish. If price does go bullish, then it's fine. That's exactly what I anticipated. But just because that price has done that, even though I anticipated it and I was right, which is often the case. If you look at the weekly outlooks, a lot of my directions are correct. Just because I haven't caught that move, I don't care because I've secured that. Because this is the model and this is my intention. So this is where you need to decide what is your market intention, whether you want to swing, scalp, or intraday. You need to stick to that mindset. If you're going to scalp, you need to be closing that trade on the day. However, you can still have that swing potential as long as you can justify why you're doing it. Same with intraday. If you're going to close it with good reason. or if you can hold it with good reason. And with swings, you don't need to question it at all. You've got a reason to hold it. But I think a lot of you are trying to jumble up the three without understanding the differences. And I think you need to spend more time watching the breakdowns to understand. Although the trades are lower time frames, the reason why we catch some bigger moves is because there's higher time frame intention. And you don't even need to say this doesn't even need to be 4 hour or daily. It can be 1 hour, for example. I don't know why I keep doing my ones like that. It's not even a one. Oh no, say this is the 1 hour, and then I catch a 15-second trade in there. It doesn't matter. I still got a reason to hold the trade. A lot of the time, to be fair, even then, a lot of the time I use the 1 hour anyway to as my targets, as you'll know from the breakdowns. But the idea is, I had the idea that I've already secured this, so I don't care whether it gets there or not. So you need to be able to let go in that case. But anyway, I will stop waffling there. I will slowly get ready for bed, I suppose. I hope you have a great trading week. Trade safe, stick to the plan, and also welcome to. There's a lot of new people in the course program and the access program. I just want to wish you a warm welcome and good luck in your trading journey. I don't think I do this enough, to be fair. To welcome you guys in. I know I welcome you guys in the group chat, but I never actually mention it in these videos. But yeah, welcome. Take your time. I hope you obviously enjoy, but make sure you watch every single part of the course just so you have a better rounded idea of what we do here. To be fair, you might not be watching this Outlook, and if you're not watching this Outlook, I mean, you won't even hear it from me. But I'm proud that you're not, because you shouldn't be if you're new. But anyway, trade safe and stick to the plan.